Hi, my name is Darren Joseph HDR Tax. We're a team of tax advisors that seek to demystify the sometimes confusing world of cross-border tax. And today I have the honor and the privilege of chatting with Mr. Louis. Louis, you want to introduce yourself?
So my name is Louis. I'm from Singapore.
Uh-huh.
I'm a personal wealth manager, and I deal a lot with, I would say, high net worth and also people from around the region who wants to manage your wealth here in Singapore.
Fantastic. So we have three or four questions which we go through in turn. And the questions were so interesting and so it's questions that are easily misunderstood. We're just taking the opportunity to record this Q&A and share it with you. Hope it helps.
Okay, so your next question. If an annuity purchased in Singapore by a Singaporean, in this case, like a grandmother who is not U.S. exposed, is then given to a U.S. citizen, the granddaughter in this scenario, how is the U.S. government going to tax it? Well, it may not, typically it shouldn't be taxed. The grandmother, the Singaporean, shouldn't be taxed because under U.S. tax laws, the transfer tax law specifically, whether it is a gift or an estate, the person that gives the gift doesn't have a tax burden. It's the person that receives, the U.S. taxpayer that receives, that's potentially exposed, right? So the giver, no, the receiver, yes. So the grandmother is free and clear, but let's talk about the granddaughter who is theoretically U.S. exposed, right? So if it's a gift, the U.S. taxpayer is required to report the receipt of foreign gifts or bequests only if the applicable threshold is exceeded. So for the purposes of determining the reporting threshold, you must aggregate all the gifts received from related parties because, people try to game the system, right? So gifts or bequests from an NRA, a non-resident alien or foreign estate, required to report the receipt of such gifts or bequests only if the aggregate amount received from the NRA or the foreign estate exceeds 100K US during the taxable year. If the gifts or bequests exceed 100K, then you must separately identify each gift in excess of 5K, right? So purported gifts from foreign corporations or foreign partnerships, though, just in case it's relevant, you're required to report the receipt of such purported gifts only if the aggregate amount received from all entities exceeds $17,000 for 2022 and $18,500 for 2023. It's adjusted for inflation, so it moves up each year. So you must separately identify each gift and identify the donor, the person who's giving it. Know that the IRS may recharacterize gifts from foreign corporations or foreign partnerships and may recharacterize them as an actual distribution, taxable distribution. So keep that in mind. You want to make sure that the actual substance of the transaction is reflected over the form, substance over form, one of the things you need to keep in mind. Now, if you fail to properly report these on the 3520, or if you report it in an incomplete fashion, or if you make a mistake or you misrepresent it, there are penalties that would apply. It's on 5% of the value of the gift or the bequest for each month that is not reported, so don't be late, and not to exceed 25% of the gift unless you have reasonable cause for the failure to timely or accurately file. I hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.